I'm Dr. B, and yes, I'm a real ER doctor, so you may be wondering, what am I doing here in this space? Well, after years of pain from sports injuries, I listened to my doctor and had to pivot into a career that would keep me off my feet as much as possible. I also have a degree in finance, and so it was a natural transition to join Verified Investing. I'll share my prescription for becoming a successful investor right here on the Market Pulse. Welcome to the Market Pulse. I'm Dr. B here at Verified Investing. Today we have a special guest, Jim Wyckoff from Kitco. He was on my first episode, and today we're going to be talking about the markets and also trend following. All right, so welcome. We have Jim Wyckoff here, the Senior Markets Analyst at Kitco Metals. And we're going to get right into a couple charts and hope that Jim can comment on these charts and help us with trend trading. So in general, the way that I think about trend trading is in uptrends, we look for higher highs and higher lows. And in downtrends, we look for lower highs and lower lows. Jim, is that generally about how you approach a trend?
Hi, Dr. B. Yes, indeed. That is, in fact, what you just described in my mind is the most important element of market analysis is determining price trend. And you can certainly determine price trends by those higher highs and lower lows. And also, some people draw trend lines. They can be used, but the reaction highs and the reaction lows and price trends are the most important and the most accurate, I believe.
Fantastic, fantastic. Yeah, so we're going to look at a couple charts here. This is the SPY, the S&P 500 ETF Trust, right? And so a couple of things that I wanted to point out here. This is the hourly chart. You can see here that you have higher lows, higher highs, higher lows, higher highs, right? And all of a sudden you start to see a change here with a lower high compared to this high right here, a lower low, a lower high, and then a big lower low here, and a potential lower high here on the SPY. So I'm curious, Jim, is this how you look at charts and trends? And I'd also be interested to hear your thoughts on the S&P and where you think it's going.
Sure. Yes, I do indeed. That's how I determine my price trends also. I would argue that the recent price action of the past couple of days and I'm looking at my daily chart right now for the June S&P 500 futures, we've seen some positive price action the past couple of days that has seen that price downtrend on the daily chart stall out, and prices are now starting to trend higher on the daily chart. And just today we hit a new 3-week high in June S&P futures.
Yeah, you know, that's a really interesting point. And I have Apple's chart pulled up here, but I'll go back to the S&P. And, you know, I do have, I think the 50 daily MA is right around 513 on the S&P. So we're going to talk about moving averages first, but after this, but I want to go and talk about Apple's chart first. So this is a daily chart on Apple opposed to the weekly chart that we saw on the S&P. So it's a bit more zoomed out. And again, we can see here that we have these higher lows, higher highs, higher lows, higher highs, and you can start to see the trend change here with this lower low, lower high, lower low, lower high compared to this high here. And that's when you really get a change, you know, in trend from an uptrend, right, then to a downtrend. So let's go on to, I think the next chart here is moving averages, right? So we have our 50 daily moving average and the 200 daily moving average. On my charts, you'll see the 50s in red and the 200 is in yellow. And again, go back to my moving averages episode of the Market Pulse, and you'll see that the 50 daily moving average is the average of the last 50 days, the price, right? The average price for the last 50 days, and the same thing for the 200. So Jim, do you use moving averages in addition to the higher highs and higher lows and so on and so forth?
I do. I consider those my secondary indicators. Price trend is paramount. There's nothing more important in a market than determining the trend of the price in your trading time frame. But moving averages are important also, even though they're secondary. And here's the important thing about moving averages, Dr. B, is a lot of people use them, so they become a self-fulfilling prophecy. If a lot of people are making their buying and selling decisions based on the 50 period and the 100 period moving averages, then they themselves become a powerful trading tool. And I think that's what we've seen the past few years. I think you've seen increasing interest in those moving averages, so they become kind of a self-fulfilling prophecy on price signals.
Yeah, it's a really good point. And here's the S&P, the SPY, right? And so again, the red is the 50 daily moving average. This is the daily chart of the S&P, and the yellow is the 200. And so, what I noticed here is that anytime the price is above the 50, you're in an uptrend, okay? Anytime the price is below the 50, you're in a downtrend. Now, obviously, the 50 is going to have a shorter time frame versus the longer, 200 daily moving average. It's going to be a longer time frame. So what I noticed here, Jim, is we had this pullback into October, November 2023, right? So let's say November 2023. And as soon as we broke above the 50 here, this red moving average, we had a major trend, north. And so what's really interesting is right in here, right in this area, okay, right about, again, 514 is when we broke down from the 50 for the first time since the fall of 2023. I'm curious as to your thoughts on that.
Well, that's the great thing about moving average analysis is that you can take any kind of a chart, any time period, and you can overlay a moving average of your favorite time period and just look and see how those crossover signals work. If you, as the chart you pointed out right there, the SPY, it appears those 50 and 100-day moving average signals are working pretty well. And you can go back and look at the history of that, those averages, and see how well they've worked. So, a lot of traders might want to do some, testing and new moving average figures to see how well they might work and do some back testing on that.
Sure. Yeah, no, that's a good point. If we look at the same chart here, you can see that, the previous 2022 highs were right here. We broke down from the 50, okay, and we came back up right here, and we broke through, and many would call this a bull trap, right? So it got a lot of people long, and then the market then reversed to put in new lower lows. And so what could be happening is the same thing over here, right? So we broke down, and maybe now we're putting in a bull trap, again, forming a lower high compared to this high right here, or the all-time highs. And this could be a bull trap right in here, and could be the beginning of the next fall. What are your thoughts on that, Jim?
Well, there's an old trading adage that says sell in May and go away in the stock market and come back after Labor Day. So we'll see that trading adage could line up with what you're suggesting right there on that chart.
Okay, all right, good to know, good to know. So I'll talk about gold now, because I know you are an expert on metals there at Kitco, and I'm interested. This is the weekly chart on gold. I'm curious as to your thoughts on gold and the trends and maybe some of your forecast. So what are your
Sure.
thoughts?
Well, the gold market is in a fully bullish technical posture, both on a near-term and longer-term basis. We've seen corrective pullbacks recently in both gold and silver, but uh, any strong bull market run is going to have price corrections, and the stronger the bull market run, the stronger the downside price corrections. In fact, you can even argue that in a solid bull market trend, these corrective price pullbacks are healthy for the trend to continue. A market that goes straight up and goes parabolic in trading terms is suggestive that a market is probably going to peak out faster than it would had it seen these normal and healthy price corrections. So the fact that we're seeing price corrections in the gold and silver markets, those are not long-term bearish signals suggesting that the market needs to pause and to continue its trek higher in the coming weeks and months. So I'm still bullish the gold market and the silver market. We've seen corrective price pullbacks. We may see some more choppy price action, but on a longer term basis, I think there is significantly more upside price potential for gold. I think there's a lot more upside price potential for silver, given its longer term price posture. So, I think that the path of least resistance for those metals continues to be sideways to higher in the coming days and longer.
Yeah, it's funny you brought up silver. I actually have it marked up here on the charts, and you can see it looks like the all-time high was right around, what is that, around $50, and now we're trading at around, half of that, right? $27.40. So I'm curious as to why you think there's a divergence between silver and gold. Gold is making all-time highs, right? Whereas silver is trading at half of its all-time highs.
Yeah, and that's one of the reasons I pointed this out in the past few weeks is with silver trading about half of its historical high and gold at hitting a historical high. That suggests to me that there's significantly more upside price potential in the silver market, maybe even more so than gold. Uh, I don't know. I really don't know if there's an answer why silver hasn't followed gold as closely as it has in the past as far as correlation on setting new highs. It's sometimes gold in keen geopolitical anxiety or tensions in the marketplace. Sometimes gold will outperform silver, and that maybe was what has happened recently. But there's other times that silver will outperform gold. So I don't think there's no real rhyme or reason why that happens, but it does happen.
Sure. Well, I'm going to go back to the gold chart here, and I want you to take a look at this. And I think that Jim would probably agree with me. But if we look back here, at what was this, 2019, 2020, the previous high here on gold, and you can see almost a trend line, right? And so gold would come up to this level right below 2100. It would pull back, come back up, pull back, come back up, and we finally broke out here. And what's really interesting is if you look at the chart of silver, you can see a very similar pattern. Now, it's not at the all-time highs, but again, you have these highs here at $30, okay? Pull back, come back up to the $30 area, a big pullback, and now we've essentially touched $30 and now we're pulling back. So potentially maybe a breakout here on silver, is to come, especially with all of the, unrest in the Middle East, and also with the equities markets being, near all-time highs. And what are your thoughts there? Do you think we could see a breakout here in the next down leg in the equities markets?
Indeed, I do, Dr. B. I think that that's probably what's going to happen. Nobody can predict exactly when it's going to happen, but commodities are highly cyclical. With gold at a new high, with the economies of the global marketplace showing improvement in growth, I think that's going to augur for better demand. So I do think the raw commodity sector is going to experience some more upside price appreciation here in the coming weeks and months.
Fantastic, fantastic. And I'll just end with one last chart, and this may actually be, a possible trade or an actionable trade for you. So I do have Google. This is the weekly chart. You can see this pivot high from back in the early 2000s, mid 2000s, and you can see this price rise. We're up around 167 on Google today. But I guess I would ask you, Jim, when you see a chart like this that is just parabolic to the upside, okay, how do you decide where to enter? Let's say on the short side of Google, you do obviously have this major resistance trend line on Google right here at about 170. But what would you look for on the weekly chart? A certain type of candle formation to start a downtrend? What would be your first indication for a downtrend?
Couple of my favorite indicators on price trend changes potentially occurring, and this is valid on daily, weekly, monthly, or even intraday charts. If you have two big price bars reversing the trend, trading against the trend. For example, if Google moves to a new daily high or new high for the price move, and then sees two solid down days in a row, and they have to be significantly, strong down days in a row. That's a clue that that market's put in a near-term top. Another clue would be uh, a bullish weekly high close. The high close for the week would suggest there's more upside. But if Google's been in an uptrend and it closes at the low for the week on a Friday, that's one clue that the bulls are exhausted and that market has put in a near-term top. So those are two big price bars, counter trend, or a weekly high or low close is a suggestion that the market is potentially due for a trend change.
Interesting. So if you can see my screen here, let's say that this is a hypothetical move up in a stock, and let's say that this is a red candle and a red candle. Would you be looking for a bigger kind of wick, or would you be looking for a big red body, let's say, and then a second day of a big red body, and that would be your trend change?
Well, I'm not an expert in candlestick analysis, but I would be looking for the red bodies, the bigger, the two solid down days in a row in an uptrend is a clue that that uptrend has run out of gas and may be ending.
Fantastic. Jim, thanks so much for coming. Jim Wyckoff, Senior Markets Analyst at Kitco Metals. Thanks again for coming on the show. We will definitely have you back when we have some other interesting, news in the markets, and your insight is always very valuable. So thank you very much.
Thank you for having me.
Take care. I hope you enjoyed that episode of Trend Following with Jim Wyckoff from Kitco. And, really, if you look back from my first episode with Jim to this episode and go through each episode, you should really have a better feel for the markets and how to navigate the markets using technical analysis. In the next coming weeks and months, I'll be going through more in-depth details of how I actually trade, how I invest in the markets, and I look forward to it. I'll see you next week. Take care.